Hi, and welcome to this video. We will continue with our Forex trading guide for you, giving you a technical analysis and chart patterns. Let's see a real example of an ascending triangle or bullish. The trade setup. Trade entry. At the closing rate of the candle after breaking the upper border at point number 5. Take profit. 220.0 pips. Usual measurements applied from point 5. Stop loss 1. 86.8 pips. Risk reward 2.535. Set at 14% of target measurement beyond absolute SL1. Stop loss 2. 201.8 pips. Risk reward 1.090. Set at 7% of target measurement beyond absolute SL2. The ascending triangle. Price action. In a downtrend, price action finds first resistance number 1, which will be the horizontal resistance for the rest of the pattern formation, where it reverses direction, goes upward till finding first support number 2, which will be the highest high in the pattern. Price action reverse direction from support number 2 and goes downward till finding the second resistance number 3, which will be around the same rate of the first resistance number 1. Price action reverse direction from resistance number 3 and goes upward till finding the second support number 4, which must be lower than the first support number 2. The pattern is completed when price action reverse direction from number 4 and goes downwards till it breaks the triangle's lower horizontal border at point 5. Before the breakout, 4 touches to the triangle's border are the minimum for a valid pattern. More touches are acceptable. The breakout of the pattern is expected at around half or 3/3 of the triangle formation, measured from the first touch, number 1, to the intersection point of upper and lower borders. The more common direction for the pattern is continuation, but that doesn't rule out the existence of reversal descending triangles. Volume usually decreases as the pattern is being formed and increases when breaking or retesting the triangle's lower border, number 5. This pattern is commonly found on medium and long-term time frames. Let's talk about trading the pattern. Trade entry. After breaking the triangle's lower border at point 5, either with an entry after confirming the breakout or after a possible retest to the lower border's rate. Take profit. Identified by measuring the vertical distance from the first touch, number 1, to the second touch, number 2. That measurement is then applied from the breakout point number 5. Stop loss can either be the triangle's lower border that turned into support number 5 or the last touch to the triangle's upper border before the breakout or number 4. Now the pattern's reward and risk. When using the last touch before the breakout as stop loss, the pattern risk reward improves when that touch is near the end of the triangle, as well as when the upper border's downslope is steeper. When using the lowest border rate as stop loss, risk reward will depend on the entry rate break rate distance compared to the target measurement 1 or 2 distance. When using the lowest border rate or stop loss, risk reward will depend on the entry rate break distance compared to the target measurement 1 or 2 distance. Always remember that both stop loss levels explained above are absolute. The actual stop loss rate for your trade setup should be a bit beyond those levels to give the trade setup some room to breathe. And of course, calculation for position size and risk reward should be done with respect of those rates. Now let's see a real example of a descending triangle or bearish. The trade setup. Trade entry at the closing rate of the candle after breaking the lower border at point 5. Take profit 285.8 pips. Usual measurements applied from point 5. Stop loss 1. 129.6 pips. Risk reward 2.205. Set at 14% of target measurement beyond absolute SL1. Stop loss 2. 308.9 pips. Risk reward 0.925. Set at 7% of target measurement beyond absolute SL2. If your trading style for descending triangles involves using SL2 method, you will notice that risk reward for that specific setup is below 1 due to the relatively long candles when breaking the pattern at number 5. In such case, that trading setup should have been passes unless your sample data for this pattern have a strong WL to compensate for the low risk reward. Now, head and shoulders. Price action. In an uptrend, price action finds field resistance number 1 that forms left shoulder's high, where it reverses direction and goes downwards till finding support number 2, completing the left shoulder formation. Price action reverses direction from that support number 2 and goes upwards till finding second resistance number 3 that forms head's high, where it reverses direction and goes downwards till finding support number 4, completing the head formation. Price action reverses direction from the last support number 4 and goes upwards till finding third resistance number 5 that forms right shoulder's high, where it reverses direction going downwards. The pattern is completed when price action breaks the neckline at point 6 downwards. Neckline is identified by drawing a trend line connecting the two support levels that completed both of the left shoulder and head formation, which are 2 and 4. Both shoulders don't have to be done at the same height. Neckline can be skewed, usually to the same direction of the trend line connection, both shoulders high at points 1 and 5. Volume usually decreases as the pattern is being formed and increases when breaking or retesting the neckline. This pattern is commonly found on medium and long-term time frames. Let's talk about trading the pattern. Trade entry. The pattern is traded after price action breaks the neckline at point 6, either with an entry after the breakout or after a possible retest to the neckline which turned into resistance. Take profit. Identified by measuring the vertical distance from the head number 3 to neckline. That measurement is then applied from the breakout point number 6. Stop loss can either be the neckline breaking rate number 6 or the right shoulder's high number 5. Now the pattern reward risk. When using the right shoulder as stop loss, the pattern's risk reward will be better when the shoulder's retracement distance number 4 and 5 is short compared to the head neckline distance. When using the neckline breaking rate as stop loss, the pattern's risk reward will depend on the entry rate or breaking rate distance compared to head neckline distance. Always remember that both stop loss levels explained above are absolute. The actual stop loss rate for your trade setup should be a bit beyond those levels to give the trade setup some room to breathe. And of course, calculation for position size and risk reward should be done with respect to those rates. Let's see a head and shoulders real example. The trade setup. Trade entry at the closing rate of the candle after breaking the neckline at point 6. Take profit 398.0 pips, usual measurement applied from point 6. Stop loss 1, 159.1 pips, risk reward 2.502, set at 14% of target measurement beyond absolute SL1. Stop loss 2, 311.7 pips, risk reward 1.277, set at 7% of target measurement beyond absolute SL2. In the case of the reverse head and shoulders illustration and structures. Price action. In a downtrend, price action finds first resistance number 1 that forms left shoulder's low, where it reverses direction and goes upwards still finding support number 2, completing the left shoulder formation. Price action reverses direction from that support number 2 and goes downwards still finding second resistance number 3 that forms head's low, where it reverses direction and goes upward till finding support number 4, completing the head formation. Price action reverses direction from the last support number 4 and goes downwards till finding third resistance number 5 that forms right shoulder's low, where it reverses direction going upwards. The pattern is completed when price action breaks the neckline at point 6 upwards. Now let's see a real example of an inverse head and shoulders. The trade setups. Trade entry at the closing rate of the candle after breaking the neckline at point 6. Take profit 95.8 pips, usual measurement applied from point 6. The stop loss 1, 37.5 pips, risk reward 2.555, set at 14% of target measurement beyond absolute SL1. The stop loss 2, 76.9 pips, risk reward 1.246, set at 7% of target measurement beyond absolute SL2. Pattern retested neckline twice, second retest almost hit SL1. This pattern duration and pivot range is much less than what is common for an inverse head and shoulders, making it more vulnerable to higher than usual market volatility. An example of that is how close was the second retest from hitting SL1. Thanks for watching. We hope you learned with our content. Please join us in future videos to continue with this series.